We keep on looking for some kind of element with regard to the election and what it means for markets down the line. Is it really that simple? Should we be focusing so much on the election right now for what happens in the market going forward?
Hi, Dom. No, I think it's really important that we have to remember that actually the election is a short-term noise. And inevitably, it seems at the moment that there will be volatility around this election. But come January, when things are resolved, you're more likely to see the market return to focusing on the fundamentals that typically drive it. So we're talking about the Federal Reserve, we're talking about the pandemic, anything to do with fiscal stimulus, rather than the actual next couple of weeks or months where the election is still creating that volatility.
So if that is the case, then, as we look towards the way that the economy here in the U.S. is shaping up, the economy elsewhere around the world, are we in a constructive area for everything to keep moving forward, provided the coronavirus stays relatively in check?
Absolutely. I think it's a mildly constructive outlook that we have. And of course, look, the big assumption here is that we're not seeing national lockdown in the US. So assuming that, then as long as we've got the Federal Reserve still heavily in play, which they have indicated that they are, we're expecting fiscal stimulus bills in most parts of Europe and, of course, in the US as well, that actually we should still see risk assets performing pretty well next year. Of course, not as well as you've seen between March and September this year when you saw the S&P rise some 60%.
Relatively speaking, the markets have seemed, kind of stable, right? You would think we had a big sell-off last week. Things seem to be rallying a little bit more. It doesn't feel as though there's a lot of money moving around. It just seems as though there's jockeying for position. Does that kind of click with what you're seeing? There's no wholesale bet being made, bullish or bearish, in the market ahead of this election? It seems as though most people are just waiting to see.
And I think that's typical of what you would expect to see in the run-up to a pretty big event, right? Nobody wants to have very big positions in the run-up to something which could be a binary event. You know, we already know that there could potentially be significant volatility ahead. So I think last week you saw, of course, concerns about the virus, but concerns mainly about how the pandemic is going to fare out and about how the election is going to be resolved.
And before we let you go, Seema, as you take a look at the way that you position either geographically or by sector, are there places that will seem to outperform regardless of who wins going in the next 6 to 9 months?
Yeah, so I think what we're expecting to see is emerging Asia do well, irrespective of what happens with this election. You know, China's got such strong growth at the moment. They're really outperforming everyone that we should see them doing well, whatever happens on Tuesday.
Shepard Smith here. Thanks for watching CNBC on YouTube.